Are you thinking about buying a home here in South Florida? Today, we're going to talk about the most important and critical step in buying a home. So stay tuned. So we're going to talk today about getting your pre-approval when you decide in purchasing a home. It is literally the most important and critical step in the home buying process. And there's several reasons why, and we're going to talk about that today. So why do you need a pre-approval? The pre-approval is important because it's really going to determine your buying power in all of this. It's going to determine, number one, what is actually going to be your purchase price, or at least give you a range. And number two, it's going to tell you exactly what your monthly mortgage will actually be. These are two really important things in terms of affordability and what you can actually do with the purchase of your home. So really important to keep that in mind. So what do you actually need for your pre-approval? So the important thing is to contact a lender that you know, like, and trust, and they're going to ask you for several things. A couple of things that you need to keep in mind as you actually prepare to purchase your home and get ready for the pre-approval is you've got to make sure that you have great credit. The higher the credit score, the better the interest rate, and it will actually lower your payment. So it's really important, if you're planning on buying in 3 to 6 months, maybe to see what you can actually do to clean up your credit if you have any issues there, or maintain your credit as you get closer to the date that you'll actually be ready. It's also important to make sure that you have low debt. So what that means is making sure that if you have any outstanding debts on any credit cards, that you start paying those debts down. It does make a big difference because lenders actually look at your debt to income ratio. So the amount of debt that you're carrying versus the amount of income that you're actually making. So when you pay those debts off, essentially it gives you more wiggle room in your actual payment, so you'll be able to buy a little bit more house or afford a little bit more of a mortgage if you have less debt. You also need to make sure that you have great income. That part can be a little bit tricky. Most everyone's income is pretty stationary. However, if you're an independent contractor and you actually get paid and you pay your taxes kind of separately at the end of the year, it's important to keep that in mind because you'll actually need to make sure that you're filing your taxes correctly. So you need to check with the lender, check with your accountant, and make sure that you're claiming enough income instead of too many expenses, because that'll actually decrease your income and will decrease your buying power as a borrower. And then lastly, the important thing to keep in mind regarding your pre-approval and planning is making sure that you have saved funds. So you will need some money for several things. You're gonna need money for your down payment. How much down payment you'll actually need will be determined by the lender, and every case is going to be very different. For example, if you're a primary buyer, there's gonna be a specific down payment for you. If you're buying as an investment, it's gonna be a higher down payment. If you're buying a single family home, typically that's going to be a lower down payment versus buying a condo or a townhouse could be higher. So those are the important things to keep in mind, and that's why that conversation with the lender is really important. The lender is going to ask you for a couple of things in terms of paperwork that's going to be really, really important. And I want to mention a couple of those things now. However, keep in mind that they may ask for additional things. So this is not a complete list. This is just kind of a rough list, if that makes sense. They're going to ask for a copy of your ID, and that's to identify who you actually are as a person. This is important, of course, with all the fraud that's going on in the world today. They want to make sure that you're the person that's actually applying for the loan. They are going to request proof of income. So they're going to request it in a couple of different ways. If you're kind of a standard employee, they're going to ask for a W-2 form. They're going to ask for pay stubs. And then in addition to that, for independent contractors and also for W-2 employees, they're also going to ask for 2 years of tax returns. In addition to this, because your actual down payment is going to be really important, they are actually going to ask you for at least 2 months of bank statements. Depending on the type of loan that you get, they may require more, but that tends to be pretty standard. So they're probably going to get some information from you because they're going to be actually pulling your credit. So just be aware of of that. It is a hard pull, but it's an important step in the process, and it's kind of, an important thing that they actually see where you stand in terms of your credit report, if you have any late payments, things like that. They assume a certain amount of risk when borrowing to different people, so they want to ensure that you're a solid buyer. So just be aware of that. It's something that's really important. Sometimes in pulling the credit, the lender is able to say to you, hey, we need to pay this debt off, or we need to clean up something here, and it's actually really beneficial. I have a great lender that actually helps buyers prepare so that you get the best outcome possible with the best payment. The other thing to keep in mind in all of this process, which I actually did not mention earlier in terms of your down payment, are closing costs. Closing costs are typically pretty significant, I would say. So it's really important to make sure that you have those extra cash reserves on hand. Sometimes lenders will actually request or require that you have additional cash after closing so that you're able to make your payments. So they may require that as well, but closing costs are really important. So make sure that when you connect with a lender that they actually explain what that's actually going to look like, and that you have enough money to cover your down payment and your closing costs. The other thing in terms of reserves and actual funds that you need to be aware of actually having money for your inspection, money for an appraisal, and if you're purchasing a condo, something called a condo questionnaire. That's a form that's required by lenders. Usually condo associations fill that out, but you as a buyer will be on the hook to make that payment as well. So bearing all of that in mind, it could be an additional anywhere from $1,400 to $2,000 plus money that you'll need in your pocket just to actually go into the transaction before you actually close. So it's important. So hopefully with this information, you're well on your way. I hope this was helpful. It's important to select obviously a realtor and a lender that you know, like, and trust to help you in this process. My name is Hector Valdes. I'm a local realtor here in South Florida, and I'm always happy to help answer any questions regarding any of this process. If you enjoyed my video, please like and comment, and please subscribe. Thank you.